Welcome back to Krown's Crypto Cave and a bit of a different video today of carrying on the skill video tradition, which is going to be focused on what to do if you are not having success. Now, I'd even postulate that the sort of skills that we go over within this video would be very much useful for people who even are having success right now and who are not already doing this. And this video topic was really born about a continuing conversation basically that I've had with many people in past and present and probably in the future as well. So I wanted to make a video that will directly say exactly what I want to say in these sorts of situations because it might be relevant to you. It was certainly a video that I probably would have liked to have heard when I was first getting started, and it is this. Okay, first we'll start off with the issue. A little bit of ranting right here, so apologies while my raspy lesbian voice is about to get ready for a little bit of more intensive language, and it's this. A lot of the time, people come into this space, people come into trading, or really any skill for that matter, and they expect to be good right off the bat. The problem is that with any skill at a high level, you're going to need to likely dedicate a ton of time, a metric shit ton of time, actually. Typically speaking, there have been studies done that show about 10,000 hours of dedicated practice towards a skill is when you become at the master level. I would even say that, you know, by hour 2,000 or 3,000, you're pretty damn good. You're probably consistent by that time, and then just small incremental changes above then. But here's the thing. Most people rush into trading, and they treat it as if it's just you're going to be automatically good right off the bat, and people are usually, what I see them do is they go in and they trade a full live account right off the get-go, or even just any amount of finances off the get-go. And I cannot stress this enough. I seriously cannot stress this enough. Please, 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 for the love of fucking God, if you're just getting started, or if you're not already successful and you're not consistently successful, actually more importantly, stop trading real money. You're just donating it to more successful traders. That's all you're doing, and you're not getting better for it, or at least you're not getting better for it in a way that's going to help you long term. Let me explain. When you're first starting, trade a demo account. You can get all of the repetitions and experience that you need right off the bat without any real financial consequences. This is fucking powerful. Myself, I did not trade a real dollar account for 4 months, 4 months. And I was surrounded by some of the best traders in the world. My mentor, or the guy who I refer to as my mentor, sounds like a weird, term, but basically the guy who taught me trading, he had been trading for about 35 plus years. And even with that, it still took me about a year and a half. I am a bit of a slow learner, but I do feel like because I am a slow learner, when I actually get things, like I do feel like I really get them. Perhaps you're similar out there as well. On average though, especially after doing this channel for a while now and having my own programs and seeing people who like actually really dedicate themselves going towards it, usually around, a year on average, I'd say. Some people a little bit more, some people a little bit less, but about a year on average is what I typically do find. Now, the problem is though, is that when you're first getting started, everyone gets super excited. You're learning the indicators, you're learning the whatever the hell edge that you're going to use, and you start to identify trades and you immediately want to take them because you realize, oh my God, I could have made $100 right here. I could have made $100,000 right here if I traded this one perfectly from fucking top to bottom. It's like, hey, slow down. Slow the fuck down. Believe me, there's no rush. Markets ain't going anywhere. They've been here far before we were ever alive, assuming that you're, viewing this video somewhere around the year 2020 or somewhere around there. And they'll be here for a very long time when I'm dead. And hopefully a little bit longer than like today. But you never know. Knock on wood. Anyways, my point is that yes, there is no rush. However, within that first sort of period, it's incredibly important to trade a demo account. You want to be getting real experience, which, yes, at the beginning, it is fake money, of course, but take advantage of it because there's no drawback towards you doing that. And here's the thing, people rush into these sorts of things, myself included. I don't want to take myself out of this equation because I am the same way. I want shit right here, right fucking now. We live in the 20th century, of course, or the 21st century, and that's just the MO for us all who were born, past the, I guess the 80s and 90s, right? As we had the internet age, and then things just come almost immediately now. Well, with that said, think of it this way. You are potentially building a skill that is going to be able to provide you a living for, if you want, perhaps the rest of your life. That's powerful. There's no rush. And seriously, just learning something for like a year or two and not really putting any like real money at risk is not a detriment when you're thinking, maybe decades in the future, right? You don't feel as rushed when you're in that sort of a mindset, because believe me, it's likely going to take some time. There's no magic pill in trading, at least that I'm aware of, to this date on, I guess this is the 10th day of December of the year 2020. And with that said, it's just trusting the process that experience plus time and progressive desensitization is what's going to make you essentially successful in not just trading, but any skill really that you do choose. That also means though that the time is really your major limiting factor, and you can really only master like a few skills in a lifetime, unfortunately, at least with like a 70 to 80 year lifespan, assuming that you don't really fuck around with with your time to begin with. So with that said, again, the first major thing, don't trade real amounts. Seriously, do not trade fucking real amounts. Make use of a demo account. All major exchanges pretty much have them, whether it's cryptocurrency shitcoins, whether it's Bitcoin, whether it's Forex, whether it's traditional, whether it's commodities. You'll be able to find a demo account on just about any major trading venue, and that will allow you to get that first, those first few repetitions in without having any major financial consequences. Because I actually missed this point, but because the point is that, or perhaps you can like backwards engineer this, but the point is that I'm slowly getting to is this. If you put your real finances at risk when you're in the learning phase, you really can't expect sustained and consistent financial success with trading, or anything for that matter. And all you're doing is paying a tuition that you didn't need to pay with actual money. You could have just paid it with time, but now you're paying it with time and money. And that money could have been used as trading equity when you've actually solidified your skills. So let me kind of document the path that I've gone through and that I've seen many other people go through, and perhaps you yourself are going through this as well. And when I first start, I was, like I said, I was doing a demo account for 4 months. 4 months. My mentor wouldn't let. I was trading this account eventually, and he wanted to the idea was he was going to kind of train me up, and then I was going to trade with him. And so he was saying, hey, no trading real amounts until you can actually prove that you fucking know what you're doing, you idiot kid. He's talking to me like that, but fair enough. When you're in your early 20s, you are an idiot kid and you pretty much have no value. Sorry, but it's kind of true. Anyways, so after 4 months, and I started to demonstrate that I could be consistently successful, learning some of the things that he was teaching me, and applying it, and actually having success with that. Once that period was over, he said, "All right, kid, I'm gonna give you the keys to my account, but here's the deal: you only get to trade fucking one lot." And if you're not familiar with options terms, a one lot is just literally one fucking contract. So I started off trading one lots for the next 3 or 4 months. And guess what? After that 3 or 4 months of success, what I traded after that? 5 lots, and then another 3-4 months of consistency after that. Then I went up to 10 lots, and then started trading like actual real amounts and putting on real positions. And that was a good way to kind of progressively desensitize myself. But I can relate to newer people getting started here, because I was feeling really fucking antsy, always thinking like, oh my god, man, if I would have just taken this trade, this would have been incredible right here. What am I doing? I'm wasting time. I could be fucking rich already. I could be rich today, now, this second, right? Well, that is the whole process, and trusting in the process and realizing that, hey, this is actually going to get you to where you want to go, likely faster than if you just rush head in and put real finances at risk. Then that would be a good way. Now, during this time, obviously, it goes without saying, you do not up the risk until you actually have consistent success. What is consistent success, you might ask? Well, this is obviously going to be defined from, yourself, or everyone's going to have different definitions for this. But what I would say is, hey, at least 2 months, preferably 3 or 4 months of consistency. You want to be documenting these results down, obviously, so that you can reference this with very specific numbers. I still do that to this day. It's very, very important, and it's one of the reasons why, or one of the reasons that you can always work upon in the future to actually get better and better results with more and more data. Okay, I feel like I just missed a small point there, but Let me just reference my notes right here. I want to make sure that I get everything right here. So yeah, so long-term time horizon. And here's the thing with trading, and just like anything else, success in life, and of course, everyone defines success differently, but let's just define success as living the life that you yourself want to live. I like Naval Ravikant's idea of success and wealth, in the sense that, you know, you want to generate wealth so that you can essentially focus on what you want to focus on and not have to do the things that you wouldn't otherwise want to do. And he's great, by the way. Check him out. He has nothing to do with trading, but really, really brilliant guy, and kind of like a nerd hero, I guess. You know. Anyways, so yes, what was I just on? Right. So success is so unlikely to begin with. Most people do not live a successful life in the way that we just defined. And with that said, if you do not prepare or fail to prepare a real trading plan, a real trading strategy, and take this seriously, then do you think your chances of success are going to be higher or lower? Obviously fucking lower. And this again goes to say that even if you are having success without doing these sorts of things, which we're going to follow up on in just a second here, it would probably only help. I would imagine it would only help. It certainly wouldn't hurt. So we've got the first part down. Don't wreck yourself before you've actually even learned. That's a humongous one. Take advantage of demo accounts, then progressive desensitization is the answer after that, with results documented. The next thing that I want to get into is something that I just can't get my fucking mind around that people don't do, and this is covered in the technical analysis program, and also I believe in the neophyte program as well. But it's the trade strategy and checklist. What you need to do if you're not already having success and you're not already doing this is get down on paper or Google Documents. I mean, anyone can do this right here. I made this in literally like 2 or 3 minutes, and write down very, very, very specifically the trade strategy that you are going to be employed. And then I want you to make a checklist on that every time you potentially take a trade, you check off, is this condition met? Is this condition met? Is this condition met? And then go on from there. So I've even given an example here too. Now, this is not to say that this is like a workable plan at all, and ideally you're going to have a lot more detail than this, and this is a very bare bones plan to begin with. You know, you're naturally going to add a lot more things onto this, but it at least needs to have this. Any good trading strategy or any good trading checklist is going to have this as its base. You're probably going to find a lot of other things. Obviously in the TA program, you know, we talked about that as well. You can probably figure it out from what we're talking about right here too. This is not like science, or this is not like, you know, secretive stuff or anything like that, but it needs to have at least this as a base. So we're going to go down it right now. I filled it out with an example. And like I said, this is not to say that this example strategy is like the end all be all strategies. In fact, I'd say it's actually, I mean, it's not so bad, but it probably actually does work. But I just filled this out off the top of my head just to give an example here. Obviously, do this yourself with specifics. So first and foremost, what time frame are you going to be trading? Backwards engineer this. Think about what kind of person you are. What kind of life do you lead? Do you want to be at your computer maybe all hours of the day, and you want to be in and out of trades fast? Then perhaps choosing lower term timeframes below a 4-hour or even an hourly is going to be right for you. Then also, you know, you actually want to talk about your asset as well. In this case, I just assume, you know, it's all going to be the same, but, you know, define which asset you're looking for. That's going to be ideal as well. And then I've documented right here that I'm going to be focusing on a 12-hour, and then I'm going to actually use a 4-hour if I need to make a faster decision when price action is moving in more violent and volatile ways. So again, backwards engineer what's right for you. Maybe you're the type of person who doesn't want to be putting a shit ton of focus on this like all the time, or maybe you just have a life outside of this and you want to be in trades for a long period of time. Maybe you're completely fine with going to bed with potential risk on. Well, then maybe you want to be employing more long-term strategies. Maybe you're going to be looking at like a weekly, for example, or a monthly, for, you know, if you're thinking like years down the road. I'm not. I'm more on the day trader side, and with Bitcoin especially, I'm more in like the medium-term time frame side. So I like to focus on the 4-hour and the 12-hour, and those seem to have a good amount of edge and bulk on them for myself. Doesn't mean that you can't do it any other ways. Just, you know, whatever's right for you. I can't tell you what that's going to be, but that's for you to decide. Then we move on to this. Let me just make sure that my microphone's working, and it seems to be, so that's really good. All right. Then we want to document what are we going to be using for our edge. So this is where you input what sort of indicator strategy are you going to be using. In this case, I went as fucking bare bones as possible. And I laid out an example of using the liquid zone, horizontal support, and resistance for the purpose of scalping. Again, here it could be, another example could look something like, I'm going to play the 4-hour divergence calls. Or maybe like, you're just going to play this, this random signal here. There's a million goddamn indicators, and that's just what you're going to do. Or maybe you're looking to play the golden cross on the daily, whatever it is. Get that down in detail right here. I did not put a lot of detail into this. If you are not having success right now and you're not already do this, put down more detail. More detail equals better results, very, very likely. Put some actual effort into it. This is, again, a skill that could literally give you your living. I mean, it's like tennis or fucking golf. You can play it till the day that you die. I mean, it's even easier than that, I guess. In the sense that, like, you don't even need to go to a fucking golf course to do it. All right, then we want to define our risk management parameters. So in this case right here, I went with 3 different scenarios: ideal scenario, expedited scenario, and an emergency scenario. And in this case, we should actually do this with an example too. So seeing as we do already have our main source of edge in line here, I'm going to go into the actual charts themselves, and let's just mark off some liquid zones for the purpose of a little bit of scalp action. And what do we see? Okay, so we see this level right here. We see this level right here. Nice. Let's actually raise it up. Let's get it on line with these guys right there. There we go. That's my liquid zone. To the downside, we got this one to the upside right here. Of course, we got this one right smack dab in the middle right here with that wick and that closure. Nice one. And then let's just do one more on the low side here too, and we'll actually do it something like this. Okay. And we'll put some lovely blue boxes in there too, because why the fuck not, huh? So there we go. Alrighty. So, and as you can see, we already have an example right there. We have an example right here, and fuck the other ones. No, of course not. But you get where I'm going with this one. All right, back into the trading checklist. So let's say Bitcoin comes down in this case yesterday, for example, and it comes down to this region right. Actually, sorry, we need to get a little bit further through this before we actually get into that part. Okay, cool. All right, so still kind of defining the risk management parameters. We want an ideal, an expedited, and an emergency decision. So ideal is essentially obviously ideal. That's going to be the most relevant and the most prized of conditions. And in this case, I've just said a 12-hour closure below the 12-hour liquid zone. Lovely. Expedited, a 4-hour closure below the 12-hour liquid zone. Again, referencing our time frame focus. 4-hour is what we're going to use for our expedited decision, just 1/3 of the time frame. Again, you can use that for yourself as well. It's just an example here. That's it. Then an emergency condition. This is like the condition that if met, you don't want any piece of this. Something's obviously gone very much wrong, and this is a disaster. We need to get out right fucking now. So I've given some examples with this as well. And I would suggest having those sorts of conditions in there. Then how am I going to enter the position? So in this case, I'm going to layer it in thirds. I want to be entering 1/3 at the top of the 12-hour liquid zone, 1/3 at the middle, and 1/3 at the bottom. So we can actually, should we wait until we actually get this? Yeah, let's wait till we get everything knocked off here. And then how are we going to exit the position? So not only do we need entry, we need exit, and we also need risk management, the 3 pillars of trading essentially. Again, you can add certainly more to this, and I'd certainly encourage you to add more to this, but this is what it needs to be at bare fucking minimum. If you're this is like the bare minimum of doing the bare fucking minimum. So how we're going to exit these positions, I'm going to layer these in halves. So I'll take half off at the next horizontal level from a 4-hour time frame, and then half off at the 21 EMA for a 12-hour time frame. Just again, random examples right here. Not saying that these are relevant or not. It's or we could even do like 1/2 at the next horizontal 12-hour. All right. And then a trade invalidation. This one, really fucking important as well. You're going to naturally gravitate towards something over time that you notice. Again, referencing the next part that we're going to get into, I'll just spoil the surprise, trade journal, where you notice that, hey, if this condition is present, I don't care if my entry checklist is met. It doesn't matter. If this condition is present, I ain't taking the trade. And in this case, I just gave a random example again, the daily stochastic against the direction of the trade that I want to be taking. So let's say daily stokes are down and I'm looking for a long scalp, and I notice that daily stokes are actually indeed down. If that's my invalidation criteria, I don't take the fucking trade. And you'll notice these things as time goes on. And this is why it's so important to actually keep like a detailed trade journal. Anyways, oh wow, did come down all the way to 18.1 there. Nice one. Anyways, we'll go through an example here. So let's see, we're going to enter in 1/3 at the top of the 12-hour liquid zone, 1/3 at the middle, 1/3 at the bottom. All right. Well, let's say that we're referencing this piece of price action right here. And yesterday we actually did get hit on all three. In fact, 1/3 at the top, which was 17.9, 1/3 at the bottom, which was about 17.7, and 1/3 in the middle, which just, divide that in the middle. And what do we have? We have about 17.8. So 17.8 average price. We got hit on all three. Sometimes you're not going to get hit on all three. And this is, again, just an example here. But if you don't get hit on all three, or if you don't get hit on all conditions, you don't go and fucking chase it. You actually follow the plan. It's crazy. It's fucking crazy, right? But you'd be amazed. You'd be absolutely fucking amazed. Your mind would be blown in the same way that mine is when you speak to people who, say they want to learn trading and they're going to do everything that it takes, and they're not even doing fucking this. It's ridiculous. Sorry, I don't mean to be like super rude, but it is like actually, it is to be a little bit more serious. So it is fucking ridiculous. Like if you're going to take this seriously, take it fucking seriously. Jesus Christ. Anyway, so we got our entries right there. Then what are we doing? Okay, well, we know that our risk management is going to be with a 12-hour closure below the liquid zone. In this case, is that condition met? Nope. Do we have, if we're going to use a 4-hour and we're looking at a closure below there, is that condition met as well? Nope. And I think we had something like a wick below the low side of the range for like the emergency condition. In this case, I'd use this wick low right here. Kind of, it's not super scientific in that regard. Again, could probably do a much better. You're going to do a much better deal than what I put up here if you put some actual effort into it. Just want to show and demonstrate. That's all. Then we go back into it. What are we going to use to exit this one? We're going to take it in halves, and we are going to exit 1/2 at the next horizontal level from a 4-hour time frame, and then 1/2 at the next 12-hour horizontal. Okay, well, we already have our 12-hour horizontals in right here, so it looks like well, that one certainly got hit right around 18,005 or about 18,600, we'll call it. Or sorry, this was a 4-hour, but let's go to a 12-hour. Yeah, 12-hour right here, level hit, nice, not bad. But let's go down to a 4-hour, and I want to be a lot more aggressive with taking profit on this one because that's just what I enjoy doing as a trader. I like to, actually realize some as soon as possible. And what do we see right here? Well, let's mark off our next horizontal. Let's go back in time a bit. We do see that there's one relevant from this high, this low, and this breakout. Lovely. So we'll just put it in right there. And what do you know? This first level gets hit at 18,250. Second level gets hit at about 18.6. Lovely. And we basically entered in an average price at 17.8. So what? That's like a, I don't know, $450 trade on the first leg, and then I don't know, add like another $300 on top of that for the next leg. Not bad. Not bad at all, actually. In fact, that one worked pretty damn well. Not bad. So yes, you can copy this. Again, this is just literally made on fucking Google Docs. Anyone can do this. You can do this on your phone. You can do it on a piece of paper, whatever. But once you have this down, what you need to do next, or what I would really strongly suggest doing next, because this is obviously not financial advice, I'm not a financial advisor or a trading advisor or anything like that, or whatever the fuck the SEC wants to hear. But what I'd suggest doing after that is creating a very detailed trade journal where you document at the very fucking basis this: your entry, exit, risk management, and then your results over time. And what you should do from there, again, assuming that you're not already having success, is that you should document that trading journal, lock it up with this, make sure that everything's, all your trades are fitting within that criteria. And then after, let's say, I don't know, I like Mark Douglas's rule on this one. After, let's say, 20 examples, 20 reference points of taking those specific trades, decide for yourself, is this working or not? Do a statistical analysis of whether this is working out or not. What's your win percentage? What's your loss percentage? What's your average win rate? What's your average loss rate? And then figure that out so that over time you can realize what these are going to average out to, and then you can essentially know about what you should expect to be making with this sort of a strategy. If those are acceptable to you, the win rate and the win percentage, like meaning that the amount that you typically win on a trade, and how often do you win on that same trade as well. If that is acceptable to you, keep on doing that and do another, go up to like 50 iterations, right? And then now you should have enough data referenced from your trade journal to start to fill out more on the trade strategy and checklist. And you should be able to manipulate, a few inputs here and there and figure out, okay, if I change a little bit of this, or if I add this condition, or maybe, my invalidation, I want to be a little more stringent with that. That's going to get rid of, some of the unnecessary losses, and you're going to naturally start to goose the odds in your favor more and more and more and more and more over time. And that's really all that it is. Now, of course, if the first 20 iterations of whatever trade strategy that you are employing are not successful, or at least they aren't where you kind of want to be, scrap that idea. Go with a new one. 20 is probably enough to figure out if it's going to be, up your alley or not. If it's not, just get rid of it. There's no harm, no foul with it. You got plenty of time, and keep on doing that and repeating that process until you've really refined it in the way that you're comfortable with actually putting money towards. And then progressive desensitization. it's like fapping, right? Just no fap, no trade. We should start that as a fucking challenge, huh? So silly, and I would be shocked if anyone even knows that it is to begin with. So yes, going back on over here, I want to make sure that I hit all the major points. First and foremost, the issue is a lot of people come into this game, they expect immediate results, they put actual finances at risk and during the learning phase. And of course, when you're learning, do you expect to have good results? Fuck no. And what typically happens, they either lose all of their money and get discouraged that way, or they lose all their money and they, start to sell themselves until they get enough. Then they start just putting like every last little amount that they can afford in their savings and their trading account. And then maybe they get lucky at the end of the day. Who knows? But my point is that they rush through it. So the idea here is we slow down. We don't trade real fucking dollar amounts until we actually have a legitimate history, 2 to 4 months, typically more is likely going to be better, of success, consistent success, that is, defined in the way that you actually want yourself. Now, I'm not going to define that for you because you might not want the same things as me. Maybe you want more, maybe you want less. Maybe your idea of success is just completely different. But that's for you to define, and then you can backwards engineer it from there. Once you've got that down, fill out a trade checklist and strategy and figure out what you're going to be trying to do first off, and then you're going to likely start to change that around over time as you get more iterations, as you get more experience, and naturally you're going to gravitate towards whatever speaks to you best. After that, what you want to do is you want to then put that strategy to the test with a demo account, not with real finances, for at least 20 tries. And if those 20 tries are acceptable, you like the results, keep on with it and look for little ways that you can identify that will make your strategy just 0.1% better. Because guess what? 0.1% better over the course of 30 to 40, 50 fucking years, that's a lot of money actually. and then of course, if it's not acceptable, scrap it, try something new until you like what you see. Okay, that was a lot of ranting there. Again, I just this video, I created because I have a very specific avatar of a person in mind. It's not like anyone in particular. So if you think this is about you, it's probably not. It's just I've seen this so many goddamn times. And I want to make the analogy here as we get ready to part. If you were coming into trading and just expecting to be good and successful right off the bat would be the same thing as, like, let's say this is an international community, so people like soccer or football, I guess is what it's known as. And let's say, you get drafted onto the team. You get teleported onto the team by magic, the best team in the world of the Premier League. Is that even good? Manchester United. Yeah, that's the one. That's the one that everyone knows. And you're expected in your financial life, more importantly, your financial life depends on you scoring 1 goal. Can you do it? You know, would you start preparing like fucking crazy beforehand in order to try to score that one goal, or would you just go in like, man, let me just fucking jack off on the couch here and maybe I'll make some money? You're like, no. Of course, you might get lucky. It's possible in trading you can get lucky as well. In fact, I'd even argue that the worst thing that can happen to a new trader is they just get lucky for their first few trades and they think like they actually know what the fuck they're doing. That I see so often, especially when, you know, markets are mostly bullish, of which we're kind of experienced a little bit of that as of the last few months. And of course, in 2017, I'm sure a lot of people remember that as well. A lot of people get lulled into a false sense of security with trading. You know, the old saying applies very sincerely here. Don't confuse brains with the bull market. In fact, I typically say that people, blind bulls are going to make more money than a professional trader in a bull market too, because they're not thinking about these other phenomenon that need to be accompanied by. So maybe that's another topic for another time. So I'll save that one for later. But the big thing here is trade a demo account, get that trade checklist, that strategy set, then document the results with the journal, and rinse, repeat over time. You're going to naturally start to gravitate towards what you like and discard what you don't like. And with that said, I'll leave you there. Take care. And until next time.